Hello and welcome to the Fibonacci free video for Monday, September 18th. This is David, and here this evening I want to talk to you about the 30-year Treasury bond futures. Depending on your platform, that might be the ZB, or it might be the US, or it might even be something a little bit different, but those are the two most common symbols associated with this market. And we're going to look at it from the perspective of the Voodoo Lines, right? These are levels which incorporate both Fibonacci analysis, Elliott wave analysis, as well as some other math. And one of the reasons I'm calling these levels out is that they've recently changed here in this particular market. They've also recently changed in the 10-year Treasury bond futures as well. And that's notable because these levels, one of their benefits is they're typically stable for many, many years. In the case of these Treasury markets, they've been stable for 30, 40 years using the same levels. But even if they're stable for long periods of time, they do eventually need to change almost inevitably. And this was finally the time for them to change in these markets. So I wanted to walk you through the new levels, what they're showing to us, and how to make use of them. So if you've caught some of our other videos or discussions about the Voodoo Lines, you know that these red fire lines, like this one up here near 167, and this one here by 142, and this one that we were last at back here in July at about 127.5, right? Those are the most important of the levels. And then we've got the second most important, which are these tree lines, and then the snow lines are the third most important. There's a fourth most important level, sky lines. They're not shown on this particular chart simply because we're zoomed out to a weekly. But what we generally expect is a systematic movement from level to level, right? So it's very common to, or it wouldn't be uncommon with the bonds holding below this 127.5 level. It wouldn't be uncommon to look down to this 102, almost 103 area, which would be the next fire line below. But in the process of heading there, it would need to get through this 118 tree line, as well as the 112 tree line below that. And back here last year, you can see that that the move down in the bonds stopped late last year at the tree line, tried to bounce, tried to even get above the fire line, but ran into the next tree line above, and that has sent us back down after establishing resistance near this 127.5 fire line first. And that's a very typical sort of roadmap, and it highlights the fact that these lows that we've been seeing in here at the bonds up against these lows from last year are at an important support area. But if they make it through there, then the next level to watch is, you know, this 112 area, about 112 and 10/30 seconds. These bonds are measured in 30 seconds. But this 118 level is a very important spot to watch to see if it breaks or we head back down. So if we do get a bounce here, and it can generate some push through resistance at at this 122 area and then this 124 area, then maybe we've got another decision to make up here at 127.5 in the fire line. But if it breaks 118 and stays below 118, then I would look towards potentially that 112 area as the next stop down. So you can certainly use these if you're looking to trade the bonds. You can also use them, right now the equity markets are somewhat trading with bonds, right? Late last year, we got a bounce in the equity market. Now we've come off more in the bonds than we have in equities subsequent to that bounce. But if the bonds stay under pressure, equities might as well. Now, another reason to perhaps look towards that 112 area as the next step is if we measure this bounce from late last year and the low at the prior visit to the tree line where we're at now, if we measure that bounce up into this year's high in the bonds and then look at the move down proportional to it, right? We know that we can use these external retracements to look towards targets to the downside. And usually our target one on a continuation to a new low is going to be the 127.2% external retracement. Target two is going to be 161.8. But particularly in the case of that 127.2% level, it's just a few 30 seconds away from that 112, that roughly 112 tree line, and that makes it yet or gives us yet another reason to look towards that level. Now, like I said, we do need to see that that tree line break and resistance underneath it. But if the market can do that, then I think it does set up, as I said, that next tree line down as a potential next step. Shorter time frames. Let's just make sure we turn on those skylines. Certainly keeping under this skyline right around 119.5 would allow for a revisit to this tree line. Getting above some of these smaller levels and finding support would at least put the idea on hold. But this is the important decision in the area. Again, right by 118 and 330 seconds. You can always go back in the video, note some of the other levels that we have cited there if you want to watch them. Of course, if you have the Voodoo Lines indicators, then you already have them easily available on your chart. Wanted to share with you what I'm looking here, especially as we do have new levels and levels which I think are working pretty well here in the U.S. Treasury market. So that's it here for this evening, but I will see you at the next update. And until then, as always, good trade. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.